Good morning, everyone, and welcome to another edition of Bleeding Crypto's Morning Brief. Today is Tuesday, October 8th, 8:13 a.m. local time. I hope you're having a good day, morning, or afternoon, depending on where you are in the world. Let me start off by giving my disclaimer. I am not a financial advisor. This is not financial advice. This is to be used for entertainment purposes only for your fantasy paper trading. All right, guys. So I'm just going to give a quick update. I'm really busy today. I had my meetings already with my Telegram channel and my Discord channel this morning. So I wanted to, I updated my Telegram channel and I had my video call with my Discord channel. And I just want to give a quick recap. It's really simple today. So the only thing we're looking for is I am looking for upside. Okay, I'm looking for upside, but however, I'm not looking for a reversal. And I mean what I mean by that is, remember what we talked about. Let's give the macro view first. Macro view first. Okay, so here we are in an uptrend. Okay, it may not seem like that, but we're in an uptrend. So just real quick, we have a low, high, higher low, higher high, higher low, higher high, higher low, and I am not expecting a higher high. Better said, okay? We haven't invalidated it. There's no proof that that's going to happen. But yesterday I made a case to why I don't think it's going to happen. However, it still can happen, and regardless if I think it is or it isn't, it doesn't really matter. The only thing that matters at the moment is going to be this: let me get this here. Do we climb higher today? I believe so, but I believe because of the DCT heat map cluster, this one right here. And again, if you guys want to use some of these tools, I would recommend you guys subscribe, and you can use a referral link and you'll save money. You'll get a 10% discount, and it'll be BC10. When you sign up, just put in BC10 and you'll get a 10% discount if you want to use it. It's up to you. But because of his data, I believe that we're going to go higher. Now, what I believe is going to happen is going to be similar to what we did here and what we did here. This is what I'm looking for. I'm looking for an M-top, and I'm looking for a sweep of this. So see how you have this red candle here? This represents this candle here, this wick here, better said, and this wick. I believe this is going to happen. We're going to have what I call a signature move, meaning that I'm gonna put this on the chart and you'll see what I mean right there. Okay, you see that blue line? You see that blue line that I just added right there? I believe we're going to see a move up here. We're going to slightly go above it and then come back down. And at that point, that is going to start confirming to me that we're going to begin our move down to 51,500. But as I said yesterday, better said, as I said a moment ago, the beginning, there is a lot of confirmation along the way that's going to confirm we're going there. And if it doesn't confirm, what's the opposite? It invalidates. So let's do this. Let's invalidate the up move, and then we'll talk about the down move and what that would look like as an invalidation. So we're going to go higher. We have the 200 simple moving average here. So let me just make sure that it's lined up properly. Yeah, it's right there. It's right on the money, and the 50. Yep. Okay, good. So what I'm looking for is a move. Obviously, we're going to have some resistance on the 200 MA, but I believe this carrot with the liquidation cluster has enough pull that we're going to see a move up to here, a sweep of the highs above that blue line that I posted here, and then we're going to start going down. Now, let's invalidate the down move. Let's just say for the moon boys, for all the Twitter twat traders that are nothing but moon boys, they have their head stuck in the sand and they think up only, it'll never come back down. All right, maybe they'll be right. But for them to be right, this is what needs to happen. We need to close above 786. Not just a wick, a full candle body open and close above here to invalidate this. Well, better said, to invalidate it, all I need to see is a candle on the daily time frame, come up here and close above it. That's what I need to, that invalidates the lower high rule. What that does not invalidate is the market structure that's already developing. And that's this here, the double top. So it invalidates the lower high rule. Now we shift our mentality to, all right, well, now we have a possible double top structure, which means that when you get in here or slightly above it, it's going to roll over and come down. The only thing that will invalidate that is if we break above this purple line, we close above it, we open a brand new candle, and we stay one full 24-hour candle above here, and that begins to shift, that all of this downside targets are all invalidated because we finally did something that we haven't done. We have finally had a clean break way above the channel, the top of this diagonal channel, and we're starting to consolidate. That's the beginning, better said. Then we need to see, obviously we need to see consolidation, and we need to make sure it doesn't roll over because it can easily roll over. Just like I showed you yesterday. Look, we closed for 2 days right here, and then we rolled over for 30% drop. So don't get too excited if that happens. It doesn't mean it's going to go higher. It needs to actually go higher. And that's my point. That, you know, that these Twitter twat traders, every sign, every green candle, I think is going to all-time high. No matter what they see to the left, no matter what proves that the bears are in control, they still want to stick their head in the sand and say, "Oh no, it's up only, up only." Yeah, they've been saying that for fucking seven months now. 7 months. I said yesterday 6. I actually looked at the date. It's now 7 months of the Twitter twat traders calling for all-time high when yet the bears are in full control of this channel, of the upper end of this channel, better said. And the bulls are in full control of the bottom of this channel. So invalidation, great. Now we have to invalidate the double top. That's not going to be easy. Now, if it doesn't invalidate, all right, let's talk about the two scenarios. First scenario is easy. We come up here, we sweep, we're still within the lower high rule. This becomes a lower high, and we start heading down. Or we do close above the lower high rule, and we hit the top of the channel exactly the way we did here, maybe a wick, and then we start rolling over. Now on the way down, there are a lot of areas that the bulls can step in and say, the Twitter twat traders, I've got to look out for them. I've got to stop the price action here and let's start going up. All right, that's fine. Prove it to me. First proof, 50 EMA on the daily time frame. When it comes down, can this hold? If it doesn't hold and you fall below it, now you have the bottom of the channel. Very strong support. Great. Can you at least hold that? If you can't hold that, guess what's going to happen? We're going to drop below it. We're going to back test it. Can you then invalidate we're going down? If it doesn't, it goes down back to the do or die line. Once it goes back down, guess what? It rejects, it back test. You know it's going to back test. It's going to back test. 100% it'll back test. Then when it starts coming down, pretty much over, guys. I mean, you can continue to pray to your moon boy gods and yeah, no, it'll turn off. That's fine. That's fine. But if you remove your bias and you view this as an opportunity, what does it matter to you? Who pays you? Does it really matter if the bulls pay you or the bears pay you? Does it really matter? Isn't money? So it's like I don't understand the bias people have. I just don't get it. That just eludes me because it's like it doesn't really matter. The great opportunity that we'll have here is no different than the opportunity there. If it makes you feel better, you can do this. If it makes you feel that, just invert the chart. If you just want to see candles go up, no problem. Here's a solution. Invert the chart. There you go. There you go. Up, 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 up. Let's go. Let's go. That might help you mentally to cope with the move. I don't know. Maybe. That's just a suggestion. Just a suggestion. Maybe that'll help. So as far as further downward targets, again, no point in talking about it because look, we were saved here. So we have to assume, we have to give the benefit of the doubt to the bulls and see if they can do it again. If they can't, the story changes, and I'll give you more examples of the downside targets of what I'm looking for. But right now, for today, there's two things. We don't have to go here. And it's an easy validation and invalidation. If we don't go up here, but we fall below the 50 EMA on the daily time frame, it's it. That's it. This is the lower high, and we're not going after that cluster. And this stands as our lower high. I mean, we went right into it. We stopped at 706. Perfect. It's great. That's where we ended up going yesterday. But if we continue to go, there's going to be some resistance here. Obviously, the moment we reclaim this here, this becomes a very, very attractive target and a very high probability that it's going to hit. But this is really close to each other, so we can easily see a quick impulse, knock that down, and then another wick, not as big as this, but maybe another wick down here, and close below the 200 daily moving average. But watch this. This is why you shouldn't assume anything can happen, because what if we go up here, we liquidate the big liquidation cluster here, we put the signature move, but the bears drop the ball. And the bulls say, you know what? We're back above the 200 MA. We know how significant that is. This is where we're gonna make our stand. And we don't fall below. We don't fall below, and it consolidates and it holds and it doesn't break down. You have no choice but to think higher. No choice. And again, one step at a time. Going higher means that you still have to close above here and you still have to get above here. So don't get too excited about higher. Higher just means that we may get rejected a little bit higher or a little bit higher. All right? But stay within your lane. Be very objective. Don't have a bias. It doesn't matter. Think of it this way. You have a good opportunity to short here, here, or here. Great opportunities to short and make money. And you have a great opportunity to possibly make money in the long. These two lines, to me, are going to signify the direction that we're going to be heading in for the rest of this week. So we need to get above here, and we need to get below here. Or we get below here, and we start heading down. It's that simple. You don't have to overcomplicate it. You don't need to put all kinds of crazy indicators. Nothing else. Just those two lines, here or here. Tomorrow, we'll come online, and we'll take a look and see what we've done. Were we able to get above the 200 simple moving average, and then we take out that cluster? Or were the bulls too weak that they couldn't even come after this cluster and they fell below the 50 EMA, pretty much starting to put the nail in the coffin? That's what it is. When you start falling and closing below here, you start pricking out the nails, the hammer's coming out, they're marking the areas in the coffin where they're going to put the nails in, and every drop below here is going to confirm that burial for the bulls. All right, but allow the market to do it. Don't think you don't have to look at the chart. Just set some alerts. Put an alert here and put an alert here, and then come back. You staring at the chart, you looking at Twitter for 10 hours is not going to change the direction of the market. All right, the market makers don't care how desperate you are for it to go up or down. So why look at it? Put an alert, like I said. Now, check this out. Yesterday, it was pretty exciting, and we had a nice move up, and it came all the way down. But here's my question. Did you participate in the market? Because in my copy trade, I took an altcoin. For instance, I took Doge as part of my copy trade. And for those who enrolled in my copy trade, we had 8 trades yesterday. Not 0 losses. 8 trades, 0 losses. They were all in green. However, even though I had 8 wins, 2 of those were pretty much pushes because there was a 0.43 and I think a 0.13. So that's not really, it's a win because you didn't lose anything, but you didn't really make that much. So I'm going to call those a push. 6 wins, 2 push, 0 losses. And they didn't have to do nothing. They didn't have to do nothing. I took care of their account because they copy trade me. So every time I opened the trade, it opened it on their end. Every time I close it closed it on their end. They didn't lose anything. And these were both longs and shorts. I do this every single day. All it costs you is $25 a month. That's all it's going to cost you. So if you want to participate in that, if you want to make money, and I have to look at the screen, I have to look at the chart and do nothing, just go here, bctgsignal.com, or go to my profile, click on the envelope, send me a DM, and say, hey, BC, can you send me a link to your Telegram channel? I'll pay the $25, and do it that way. All right. So something to think about, guys. It's a no-brainer. It's a no-brainer. If you look at my profile, I have a 76% strike rate right now. 76%. But you know what? Don't focus on that too much either, because here's the thing. You could have a 30% strike rate and still be killing it in the market, because it all depends on how much you get out. Say, let me give an example. I can have 10 trades, and 7 of those trades, I could have exited at 0.1%, 0.2%, and had 3 trades that were 10, 15, 20%. So in paper, it looked like I had a 30% win rate, but in reality, you made a lot of money. There was a YouTube channel that I listened to last year. They were talking about one of the most successful funds in the world. It's a fund in Africa. They have a 28% win rate, 28%. And the guy's like, and they're one of the most successful. They make billions of dollars. And one of the guys commented, how is that possible? And he explained it. Well, they cut their losses very, very quickly, but those losses still count as red. But the runners, they run, and they run hard, and they add to them, and it makes sense. It makes sense. So don't focus too much on the percentage. Right now, yeah, the percentage is great. It's 76% is my ratio. But again, don't focus on that. Focus on the fact that, can I deliver? Can I view the market in a way that I've been pretty accurate? And if you feel if your answer is a yes, try it. If you think, oh, this guy doesn't know what he's talking about, don't do it. Don't do it. I don't care. That's fine. I don't care. All right, guys. Everyone have a really good day, and let's wait and see if we get which direction we go. Another thing we can do is, because remember, this is the do or die line for the Bears, for the Bulls. Excuse me. As far as this direction, as far as going up to the liquidation data. So maybe we test it. Maybe we trap some shorts by coming here. We bounce off the 50 and then head over to that liquidation data and at 706 and do that sweep of yesterday's high. Okay, have a swing failure and then come back down. So look for that move. Look for that fake out move. Just remember, this line here needs to hold to validate this. If we fall below here, then and we reject on the back test and we can't climb above it, this is no longer valid. I'll give you guys the update tomorrow, and have a good day.